So, markets were in a bit of a mood again yesterday, and honestly it feels like Wall Street is holding its breath right now. Hey everyone, it's Wednesday morning, November 19th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. U.S. stocks pulled back again on Tuesday as worries about an AI bubble and concerns about the overall economy kept investors on edge. The Dow fell around 1.1%, which is roughly 500 points. The tech-heavy Nasdaq slipped nearly 1.2%, and the Standard & Poor's 500 moved down around 0.8%. That makes it 4 losing sessions in a row. Crypto didn't help the mood either. Bitcoin briefly dipped below $90,000 for the first time in 7 months, wiping out all of its gains for the year. So yeah, risk appetite is fading pretty fast. A big part of the tension comes from 2 major events that hit this week. First up, Nvidia reports earnings on Wednesday, and this one is huge. The company has been at the center of the AI boom all year, and now investors are starting to question whether that rally still has legs. Nvidia shares fell as much as 3% intraday before ending the day down about 2.7%. Other tech giants also got hit, with Amazon falling around 4.3% and Microsoft down about 2.7%. The second big moment is Thursday's release of the long-delayed September jobs report. It's the first major economic data point since the shutdown froze the usual releases, and traders have gotten a lot more cautious. A month ago, markets basically assumed a December rate cut was guaranteed. Now, odds are sitting around 50-50. We did get a small hint of improvement on Tuesday. Private sector job losses slowed heading into November, according to ADP. That's positive. But it's also just one piece of the puzzle. Retail earnings are also rolling in this week, giving us a closer look at consumer spending heading into the holidays. Home Depot missed estimates and cut its profit outlook, sending shares lower. And now investors are waiting on Walmart and Target to report, both of which should tell us a lot about how stretched the American consumer really is. So overall, markets are nervous, tech is shaky, and everyone is waiting for 2 big data points that could swing sentiment very quickly. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.